Hey YouTubers, it's Thursday the 24th of May 2012. We've got silver coming in at £18 on the nose, 28 US bucks 25 cents, gold coming in at £1,000 and 41p pence or pennies, or 1,569 US bucks and 77 cents. Seems like about 60 people have unsubscribed due to the B. But hey ho, some linkies for you today. The first one just came out about 4 hours ago. European business activity falls near 3-year low, so nothing is working. Not good. The flash PMI figures for May look horrible and provide a clear warning that Eurozone GDP will almost certainly show a contraction in the second quarter after stagnating in the first quarter, said Martin van Wilt from the bank ING. It's not good, said Peter Dixon from Commerzbank. The German ones were particularly disappointing as we'd been expecting some more buoyancy. It clearly indicates that the evaporating sentiment that we have seen in recent weeks as the Greece crisis has intensified is having a big impact on the economy. Genius. Next, IMF tells UK to consider rate cuts to boost growth. We're at 0.5%, my dear. It says the Bank of England's Monetary Policy Committee, MPC, which sets interest rates and authorises other monetary boosts such as QE, which provides pumping money into the economy to boost growth, should look at loosening the purse strings. Pumping money in the economy to boost growth. It does, however, point out this little bit: higher inflation. The stimulus measures can lead to higher inflation, but the IMF's report comes on the same day that the latest UK inflation figures, which show a sharp drop in the annual rates to 3% last month, the lowest rate since February 2010. Whoopee-doo. UK economy shrank more than thought. Just have a quick listen to this.
No. In fact, the market median was for a number in line with the previous forecast, which was, of course, minus 0.2. So this is a big disappointment to the market. You might recall that when the initial number came out a few weeks ago, many economists at the time complained and thought that this number would in time be revised higher. But, of course, in the interim, we've had increased headwinds from the Eurozone, and also a lot worse than expected UK data has been coming out. So this really is a confirmation of that deterioration. We've also had deteriorating German survey data this morning too, just adding to the headwinds that we're seeing. So again, the big question now is, will the Bank of England act again?
Yes, will the Bank of England act again? Even so, you say that there is this deteriorating data, but unemployment actually fell back in March, didn't it?
It did. Unemployment, of course, is a lagged indicator, meaning that what's happening, or the data that we get in the labour market now, may reflect conditions a few months before. And of course, if we look at the turn of the year, beginning of this year, then some of the survey data in the UK then was better. So again, this raises the question as to whether or not whether or not unemployment can really sustain this improvement. And looking at the data that's been coming out recently, and the conclusion is it's going to be a big struggle for employers to carry on employing people given this gloomy environment.
We had the minutes out from the Bank of England's Monetary Policy Committee indicating that really the door will still open for more quantitative easing. Do you think this will now happen given this latest data?
This latest data certainly increases the chances of more QE, as we had yesterday with that retail sales number, which is also very poor. Recessionary conditions do suggest that inflation rates should be pressured downwards, and that should confirm that Bank of England does have some scope for QE.
And also looking ahead, of course, these figures are for January to March. Looking ahead, we have an extra public holiday for the UK because of the Jubilee. And also, as you say, the headwinds coming from the Eurozone crisis. What do you predict for the next quarters?
Well, we're hoping for something a little bit better for the UK in the next quarters. I mean, the Olympics over the summer, the Jubilee, that can all lead to a boost in spending, and that hopefully should be good for the UK.
Oh, anyway, we got the Olympics in summer, so the global economy is going to be, or the UK economy is going to be saved by a man running around a field. Next, some of you have seen this. Swiss Parliament examines gold franc currency today. This is where they're looking at bringing out, where are we? Here we are, just lost the highlight bit. One of the new gold francs, on the other hand, with a gold content of 0.1 grams, could be purchased for just 5 francs at current prices, and would mean that gold became more widely owned by ordinary people in Switzerland, and could even become a medium of exchange, as is happening in Utah, Montana, Missouri, Colorado, Idaho and Indiana in the US, where gold has become legal tender again, or is set to become legal tender again. We'll keep stacking on that one. Next, this couple of little interesting ones at the end here. Facebook and banks behind flotation face lawsuit. This is basically referenced the massive pump and dump that has occurred on Facebook, and the people behind it. In a nutshell, what happened is they came out and said Facebook is valued at X. So everybody ran out and bought shares, but behind the scenes it was really valued at Y, and that information was only passed on to certain people who probably shorted it when it opened and made a small fortune. And last one that tickled me is China fake parts used in military equipment. This is where the oh dear, they've found little things that aren't the real McCoy, and they're fake. So jets and stuff flying around and saying we're going to do X, Y and Z, they probably flick their switch on to fire a missile and get a Nintendo sound or something like that. Anyway guys, all those linkies are down below, and watch yourself.